Hi guys, how are you? Right, so I trust you're all doing great, okay? So most of you asked me about fair value gaps, right? So what are these fair value gaps, right? First thing that you must understand is that the market it must give price or it must deliver price efficiently, right? So the market must what? It must always give fair price, right? So the market must be fair. So by the market being fair, what do we mean? We mean that the closing price of the previous candlestick, it must be the opening price or nearly the opening price of what? Of the current candlestick or the following candlestick. Right. Okay. Then also the dead candlestick must what? It must also be what? Be around the closing price of what? Of the previous candlestick. So the market must always be balanced, right? There shouldn't be gaps. So the market must always be fair. So now when we see this gap, right, when we see this imbalance where the market is not fair, when there's been a what, there's been either a what, a strong dropping price or a strong rising price. So that is an imbalance or that is a fair value gap, isn't it? So the market must come back and rebalance those areas before going to its anticipated direction, isn't it? So as traders, all right, based on our strategy, what are we looking for, right? What are we looking for based on our strategy, isn't it? So here we have GMT, right? You can see that this analysis are from my cell phone, right? So we have GMT, isn't it? We have GMT. So what happened on GMT is that you can see that here, based on our strategy, we're looking for what? For a break of structure, of which it happened here. We what? We broke our structure, isn't it? We broke this lower low. Then after breaking this lower low, right? After breaking that lower low, you can see that what that imbalance that now the market is not fair. It is not giving us a fair price after a break of structure. So once we see that imbalance, we want the market to rebalance that imbalance, isn't it? So the market, it must what? It must always deliver fair price, right? It must always deliver what? Fair price. So you can see here, from here to here, there's been a what? There's been a gap. So this is a gap. This is a gap, right? So as I see this gap now, what am I looking for? I'm looking for a short entry because it has broken my structure, showing me a what? A bearish trend, or a what? It shows me what? A bearish trend or the beginning of a downtrend, right? So now I'll be looking for what? I'll be looking forward to take a what? To take a short entry, right? So I'll be looking for short because of that break of structure and a fair value gap, right? So I take my what? My entry. My target is always 2% on spot, right? Stop loss, it's 1%. So the stop loss, it is ideal around this area, right? But even the 1%, it is still reasonable, right? Even the 1% stop loss, it is still reasonable. So this is what we are looking for basically, right? So if you can see here again here, right? If I can cancel this one, if you miss this trade, so you can see now what happened here. Again, we had a what? A break of structure, a long-term what? Break of structure, isn't it? Long-term break of structure, break our structure, right? And we created a what? A strong imbalance, right? A very strong bearish imbalance or a fair value gap, right? So when gaps are this wide, it is advisable for you to what? For you to either take your entry right at the beginning, I mean at the end of what? Of a fair value gap, or at the center of your fair value gap, isn't it? So when it is this wide, because you can see this one is what? It is very wide. It is a very wide what? Fair value gap. So we can what? We can anticipate our entries right at the end or around the center of this fair value gap, isn't it? So you can see the imbalance, right? Then now let's say you don't want to miss this trade, then you check it on what? On the half of the fair value gap. That will be your entry, right? That will be your entry. uh and this will be your target. We only target 2% on spot, then that could be your what? That could have been your take profit, right? That could have been your take profit. So we are looking for what? For a breakout structure, right? After a breakout structure, do we have an imbalance? Yes, we have an imbalance. Then is it rebalanced? Yes, if it is rebalanced, then we are looking for what now? We are looking for long entries, right? If you can come here again, it was around what? It was around 6, right? Around 6, 7. That is my trading time. That is where I want to trade mostly. It's Johannesburg time, isn't it? So you can see we have the what, the breakout structure. We have my what? My fair value gap, right? Is it rebalanced? Yes, it is rebalanced, right? Where is my entry? I take my entry at what? At the opening price, because this gap is not that wide. It's not very wide. So I can take my entry right at what? At the opening price, isn't it? I mean, right at what? At the beginning of what? Of this fair value gap, right? So in this case, it is a what? It is a bullish fair value gap. I can take my what? My entry here. Just stop loss can be below this area. So you can see even when the stop loss is wide, but it's still less than 1%, right? So I what? My target is what? It is 2%. So I'm not selling, I'm not trailing stop loss until it is what? It is 2%, right? Until I hit 2% profit, I'm not doing anything. So I will hold until it hits my take profit. So you can see what happened here. You could have hold this trade, you hold it, then eventually what? We hit take profit, right? We hit take profit. So you can see this fair value gap, it was rebalanced not only once but twice, right? It was rebalanced not only once but twice. Okay, so we hold until we take profit, right? And also it is very important to to mark the trading times, right? Don't just trade when you feel like trading. Mark the trading times. When you find these fair value gaps, mark those trading times so that you won't find yourself in in risk of losing your capital because you entered the trade too early or you entered the trade too late. Okay, so that is what a fair value gap is. That's what a fair value gap is. So we can even look for another trade. I think ape is also good on using the strategy. It is also good. It is also good. It is also good. Okay, so just a nice example here. Perfect example here. We have a breakout structure, right? You can see that we broke this lower low. That is a break of structure, right? So as soon as we break, I know that okay, we broke structure, then we are in a downtrend, right? Where is my fair value gap? I have a gap, right? Yes, I do have a fair value gap. Here is my fair value gap. I want the market to do what? To rebalance to this area. Then I'm taking my short entry, isn't it? So the market what? It rebalanced, right? It did rebalanced. Then you could be looking for what? You could have been looking for short entries, right? Could have been looking for what? For short entries. So target is what? It is 2%. Do we make 2% here? Okay, let's see if it is giving us the 2% because we want 2%, nothing less, nothing more, just 2% on spot, right? So you can see here that we didn't make that 2%. We were just close to 2%. We failed to make it, right? So this could have been one of those losing trades whereby whereby you feel like giving up because you are on profit, right, close to TP. Then also we have to keep in mind because of that block on our left. But this is what we are looking for basically when we're trading this strategy, right? Same thing applied here. So this was a losing trade. I just took this trade, right? So this was a losing trade. But also what happened here during this trading time? It is important to be on the market around 7 a.m. to 10 a.m. It is very, very important because those good setups are being delivered during those time. Okay, so here you can see where the breakout structure, isn't it? Then we also have what? Do we have a favor lookup? Yes, we have a favor lookup. Here is it. Here's our favor lookup, right? Here's our favor lookup. So I'm within this trade, right? I just take this trade, right? You take this trade. It's a white short. Take this trade. You take this trade. Your stop loss. It is 1%. So you can put it here. Stop loss, right? So does it give you that 2%? Or luckily it does give us 2%. Boom, we will make our what? Our 2%, right? So this is what you look for basically in the market, right? Want to see a VWAP lookup? We have a breakout structure. Yes. Is it rebalanced? Yes. You can see even in the morning today, I don't know why I missed this trade. uh right, so even in the morning where the what a breakout structure, right, and the what and a fair value gap, right? So you can focus on one time frame and just target that 2%. It will always deliver. 80% of the time it will always give you that what that winning trade, right? You don't have to force trades, right, but it will always give you that what that profitable trade, right? Right now it might go down, but early in the morning you could have what? You could have capitalized, right, on this long entry here. This is your long entry. Although it looks like it didn't give us the what? The 2% that we wanted. Right, so it didn't give us 2% that we wanted. But when you see the market rejecting like this, we don't have to hold or hope or on it going to our direction. So you just take profit and leave it like that. So this was one of the daily setups today that could have given us uh, our daily target, isn't it? So this is how you trade fair value gaps. This is how you trade fair value gaps. Next time we'll talk on why don't I use these gaps, right? Why don't I use these gaps? Okay, because they are also fair value gaps, but why don't I use them? All right, so we'll talk about it next time on the mentorship. Okay, guys, so thank you so much. Have a great day. Enjoy. Thank you.